What if I told you there's a business where people literally pay you every single month just to store their junk? No employees, no inventory, no complicated product, just empty boxes of space and a whole lot of cash flow. Welcome to the economics of owning a self-storage business, one of the most overlooked, recession-resistant, and quietly profitable industries in America. So what exactly is self-storage? It's simple. You own a facility with hundreds of individual units, small rooms, basically, and you rent them out to people who need extra space. People use them when they're moving, downsizing, going through a divorce, running a small business, or just hoarding way too much stuff they can't throw away. Here's where it gets interesting. The self-storage industry in the United States alone is worth over $44 billion a year. That's bigger than the entire Hollywood film industry. And it's been growing every single year for the past 3 decades. Even during the 2008 financial crisis, self-storage was one of the only real estate sectors that stayed profitable. Now let's talk money. How much does it actually cost to get into this business? Building a new self-storage facility from scratch typically runs between $2 and $8 million depending on location and size. But here's the smarter play most people don't know about. You can buy an existing facility for as little as $500,000 in a smaller market. And it already has tenants paying rent on day one. Let's break down how the money actually works. A typical facility has between 200 and 500 units. Each unit rents for anywhere from $50 to $400 per month depending on size. So let's do the math. Say you have 300 units averaging $120 per month. That's $36,000 in gross monthly revenue, or $432,000 per year. Now, you won't be at 100% occupancy. The industry average is around 85 to 92%. So realistically, you're looking at about $30,000 to $33,000 per month in actual collected rent. What are your expenses? Property taxes, insurance, utilities, maintenance, and maybe 1 or 2 part-time employees. For a 300-unit facility, total monthly expenses typically run between $8,000 and $14,000. That means your net operating income, your actual profit before debt service, is somewhere between $16,000 and $25,000 per month. That's a profit margin of 40 to 65%, almost unheard of in most businesses. Location is everything in self-storage. The golden rule is, you want to be within 3 to 5 miles of a dense residential area. People don't drive far to access their storage unit. The best locations are near apartment complexes, military bases, college towns, and areas with high population turnover. These are your bread and butter customers. Here's what makes self-storage so attractive compared to other real estate: it's incredibly low maintenance. Most modern facilities are fully automated with electronic gate access, online payments, and security cameras. You can run a 300-unit facility with just one part-time manager working 20 hours a week. Compare that to running a restaurant or retail store, it's night and day. Self-storage is also one of the most recession-resistant businesses you can own. When the economy is good, people buy more stuff and need storage. When the economy is bad, people downsize and need storage. You win either way. But let's be honest, it's not all perfect. The biggest risk is oversaturation. If too many storage facilities open in your area, you'll face a price war and your occupancy will drop. The second risk is picking the wrong location. A facility in a low-density rural area might never reach 70% occupancy, which means you're barely breaking even or losing money. So how do you actually get started? Step 1. Do your market research. Use tools like SpareFoot, StoreTrack, or simply Google Maps to analyze how many facilities are in your target area and what they're charging. Step 2. Find your property. Look for commercially zoned land near residential areas. Work with a commercial real estate broker who specializes in industrial or flex space properties. Step 3. Financing. Self-storage qualifies for SBA loans, conventional commercial mortgages, and even USDA loans in rural areas. Most lenders love self-storage because of its stable cash flow and low default rates. What kind of return on investment can you expect? If you buy a facility for $1.5 million and it generates $200,000 in net operating income per year, that's a cap rate of about 13%. That crushes the stock market average. And here's the kicker. As you pay down your mortgage over time, your equity builds. After 10 years, you could sell the facility for 2 to 3 times what you paid for it, pocketing a massive capital gain on top of all the monthly cash flow. Let's recap. Self-storage is a $44 billion industry with 40 to 65% profit margins, minimal staffing, recession-resistant demand, and the ability to be almost fully automated. It's not glamorous, but it's one of the most reliable wealth-building businesses you can own. If you found this breakdown valuable, subscribe for more deep dives into businesses and investments that actually make money. And drop a comment below. Would you ever consider owning a self-storage facility?